Hello again, everybody. It's Harry Boxer, the Tactical Trader. It's Wednesday, May 5th. These are the charts of the day, and today we're going to examine the short side as the market appears to have broken. And although today wasn't a drastically down day, it was a follow-through session to the downside. I'm expecting more. Starting off with American Superconductor, you'll see that the stock was in a big rising channel that saw it run from 8 to in the mid 40s, low 40s, excuse me, and finally rolled over in January and February, bouncing in March and April, forming a bear flag type pattern that failed at resistance and rolled over. I'm looking for the stock to move down towards the 21.5, 22 zone before it's over my trading target. APC and Darker Petroleum, after a long run, it saw go from 25 to 75 over a period of a year and a half. The stock rolled over hard, and at the end of April, bounced 2 days ago, but it's coming down hard again today, down another 257 today. If you step back and look at the overall pattern, it appears there is some support in this zone, as well as just above that at the prior low in here. So we'll use these two as our trading targets around 57 and 52. BlackRock, BLK, a long rising channel from 89 to 244, was broken in January, February. The stock then moved, attempting to rally, but was unable to do more than rally back to resistance and then rolled over hard. That support bounce formed a bear consolidation, and they got crushed in the last 6-7 sessions, dropping from about 210 down to 173 and change. Now the stock may be oversold short term. It could bounce back since it's also near the bottom of the channel, but I'd use that particularly if it comes on low volume as an opportunity to add to the position with additional downside targets of 160 and then 140. CF Industries in a weak ag group. After a long uptrend, the stock reversed sharply in March, came down hard from the $110 range down to 76 over the last 60 days. Again, right at near short-term support and could bounce here, but I'm looking for eventual levels down in the high 60s. Any bounce may be used as an opportunity to enter new short positions. DO, another of the weak oil group, also has rolled over hard in December and January, bouncing in February and March, and then rolling over very hard in the last couple of weeks, dropping from 93.5 down to 75. Expected a bounce here would be a possibility, and would look to enter shorts up near the 82.3 zone for an eventual downside target somewhere in the mid to high 60s, but at least for starters 72. First Energy has been in very weak relative position for the last year and a half. This big downtrend resulted in a bounce, triple top in this area, and then roll over. If we break this level of support, the stock is going lower. It looks to me like that downside targets in the 30-31 range, and then maybe something in the mid to high 20s. Checking in with Google, you'll see that long rising channel is finally broken. The stock has been in a down channel since, having dropped from nearly 600 down to just about 500 before bouncing today. The stock was up 335 and reversed near key lateral support, although initial support has been broken. Secondary support provided the bounce. I would look to see the stock maybe get up to 518.20, 2023 zone, something like that. If it comes on low volume, perhaps an opportunity to short Google. Goldman Sachs has been looking terrible since its plunge on the SEC investigation. It's been making lower lows with some stops in between. Bounce, 2-day bounce here, 2-day bounce there, but the stock could easily come down hard, particularly if the market does. Targets for Goldman Sachs, about a 135 range, and beneath that about the 115.20 range. JST, Jinpan International, after a nice run over the last year, taking it from 5 and change up to 26 and change, finally topped, rolled over hard a week ago and bounced, but it's coming down again. It appears to be a broken stock and may be headed for the 12.5 range. Monsanto has shown very poor relative strength over the last year and a half. as the market broke in '08. On this stock, for the next year did nothing, basically channeling, trending, and finally rolled over here to test the earlier lows, but that pattern has been broken to the downside, and the stock appears to want to go lower. I could see something in the 50-52 range as my trading target. MicroStrategy, MSTR, is definitely another stock that has broken hard after forming a major topping pattern. Came down hard in February and bounced, but made little progress over the following 60 days. It finally gapped down 4 days ago and has continued its descent down another 214 today. Trading target around 67, and then beyond that down around 62. Currently at 72. Again, all of these stocks can be shorted on strength, and as we expect that we could get a rally in the next day or two. But the trend right now looks to be down. Perfect World has been on our short list since it broke in January. It did have a snapback in March that was a little bit higher than we thought, but it came on low volume with poor technicals, and subsequently the stock rolled over in a 5-wave decline, now reaching a level at which it may be oversold short term. However, they tend to stay oversold and become more oversold. Wouldn't surprise me to see this down in the 26.5, 27 range before it had a major move. SOHU, Sohu, a beautiful declining channel. This entire consolidation ended up breaking to the downside here as the January, February lows were taken out. And right now it looks like it's headed for a test at the bottom of the channel and lateral price support, both around the 38.9 zone. STU, student loan, also a broken stock. A big wedge pattern that formed over a year and a half was broken at the end of January. Stock has been in a downtrend ever since, having dropped from just under 50 down to under 28 today. Substantial drop, so perhaps a snapback may be in order, but strong downside momentum says that we could still see lower levels, perhaps 25 and then 21 are trading targets. Telvent, TLVT, also after a big run up, has formed a massive head and shoulders type top over the last 2 months, consolidated, broke down yesterday, followed through downside today, and another $1.17, and is at 6-month lows here. The down channel, if formed correctly, in lateral price support, down around 23, 3.5 is my next trading target. I can conceivably see this though in the high teens to low 20s following that. Unisys, UIS, rolling over hard here and showing no mercy. It's been down, except for one day, it's been down 6 of the last 7 days and down sharply. Downside targets remain so some support showing around 22, my initial trading target, secondary target, and a 16, 17 zone potentially. And lastly today is World Acceptance, WRLD, which has the ominous look of a head and shoulders, left shoulder, head, right shoulder. Stock is pressing the neckline now. It looks to me if it does break, we can see a test of this line down there, 27.5, my trading target, secondary target around 23. Those are some short ideas for you. Keep an eye on them as the market, if the market does snap back, those are stocks I'd be interested in shorting on strength. Bye-bye.